Target profit analysis is really the first level of major CVP analyses. And what this is doing is it is finding the level of sales required to meet a certain level of operating income. So as a business owner, you may think, I know I want to hit this amount of profit by the end of the year. So what do I have to sell in order to hit that? Also covering all of my other costs. The point can be calculated in terms of either units or sales revenue dollar amount using the following profit equation. Now, this is a very basic profit equation. You're going to see this on a lot of different CVP analyses because this is the basis of it. But this is a profit equation. It is USP times X minus UVC times X minus FC equals operating income. Now, it looks maybe a little bit more complex than it really is, but you can start bringing things together and it starts to make a little bit more sense. I mean, in basis, all it's saying is that if we take the sales price of the product, multiply it by the total cost, or excuse me, subtract out the total cost, that's going to give me my operating income. That's its basis. Now, what do these things mean? Well, the USP stands for the unit sales price or the sales price per individual unit. So what are you selling each product for per unit? The UVC, again, is your variable cost per unit or unit variable cost. Your X is how many you sell, so the level of activity. And the FC, again, is the total fixed cost. Now, that's great. That's this basis of the equation. You can manipulate this equation to make it a little bit easier depending on what kind of information you're provided. So let's do that real quick. If I start with USP times X minus UVC times X minus FC equals operating income. If you remember back in one of your high school classes, we were talking about proofs, where you start bringing things together, you start seeing things. So if you look at it, USP times X minus UVC times X, they both have X in the equation. So I can actually bring those together. Let's bring those together. USP times X. So now what we have is USP minus UVC times X. That simplifies it down. So let's bring everything else down. Minus FC equals operating income. Now, hopefully you've registered USP, or the unit sales price, minus UVC is also another way of saying unit contribution margin. So let's go ahead and make that even simpler. Let's combine those two. Let's make UCM times X minus FC equals operating income. Now, the whole point of this with the target profit is I'm trying to find out how many I have to sell. So the X is my variable that I'm looking for. So now we need to isolate X. So if we move FC over and add it to the other side, and then also divide that by the UCM, that gives me X isolated by one side. So another way of saying the target profit equation is not necessarily USP times X minus UVC times X minus FC equals operating income. It also can be stated as X equals operating income plus the FC all over UCM. Very simple equation to keep up with. You don't necessarily have to keep up with the steps in it. I just did that for you. So this is the simplified version. Let's look at how this would look, or excuse me, once you find this out, you need to understand too that the X is actually representing in units. So once you find this, if it says, the problem says, find the units that need to be sold to hit this target, then this is the example, or this is the equation that you're going to use. However, if it says how many dollars need to be sold in order to hit this target profit, then you're going to change the denominator. Instead of using UCM, you're going to use the CMR, or the contribution margin ratio. So the best way to think about this is, if it's asking it in units, you're going to use the margin. If it's asking the answer in dollars, you're going to use the ratio. Ratios yields dollars, margin yields units. So let's look at this in an example now. Let's assume that a company has the following statements and wants to know how many units they need to sell in order to have a net operating income of $20,000. So right now their net operating income is $10,000. Pretty much what they're saying is, how many do they have to sell in order for that number to be $20,000? Well, they're selling 500 to get 10,000, so naturally the number is expected to be higher than 500. So hopefully it will be. Let's go through this. Using our equation, USP times X minus UVC times X, we can use this one if we wanted to. 50 is our USP, again, times X, that's what we're looking for, minus 20, which is our UVC, again, it's given to us, times X. Our fixed cost is a total of 5,000, so minus 5,000. And we're going to put in what we want our operating income to be, which it says in there we want it to be 20,000. So set that equal to 20,000. If I move everything around, or use the simplified version, 20,000 plus the FC, which is 5,000. The UCM in this situation is 30. If I do that, it's going to give me an X of roughly 834 units. I believe it's a little bit lower, but anytime you do this calculation, you will always round up, because if you round down, that means you're not actually hitting the 20,000 mark. You're coming up just a little bit short. So in order for us to hit 20,000 in net operating income, we don't have to sell 500. We have to sell 834. By putting 834 there, that means our net operating income will become 20,000. Now, let's look at it from the dollars perspective. Same thing, except they want to know how many dollars has to be sold in order to get a net operating income of 20,000. So again, using the same equation, except this time our denominator is going to be the contribution margin. So our the operating income that we want is 20,000. The fixed cost is 5,000. That doesn't change, but our contribution margin is 0.6. Again, that is the $30 divided by the $50. There you go. So put in 0.6. If we do that, that means that the number of dollars we have to sell is going to be roughly $41,667. Let's call it that. So in order for me to get a net operating income of $20,000, I'm going to have to change that 25,000 to 41,667. And that's how you do a target profit analysis, whether it being looking at in units or in dollars.